Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Oh, there we are.
There he is. How you doing, man?
Good. Just setting up my light last minute.
Yeah, you look great, man. You look like a movie star.
Thank you. You too.
How's the weekend? Okay? All good?
Good. Awesome. Yeah, I mean,
right.
shows. Every couple hours I was googling spy stock. I was trying to get into the see the pre-market.
I told you about that futures channel, the investing.com.
Right.
Don't get caught up in that. That's the worst.
Man,
that is the worst.
We're gonna talk about that a little bit. I have some questions regarding, but
all right.
But yeah, I mean, today looks a bit dry. All this IV is going down. Do you have any ideas how we can sort this? Because it can't all be selling. I mean, there's got to be something.
Yeah. So I mean, it's a good point. So the first thing that you should be aware of is that the market's obviously up huge. It's up 2.25% today, and on days like today, they take out the IV. So across the board, if you just look at the VXX, the VIX, the SPYs, they take down the volatility because the risk or the perceived risk of a market meltdown is alleviated because the market's up. Just simply because the market's up, people think, okay, well, I don't necessarily need to have these high volatility names, or so the market makers also push everything down. Okay. Also, I would say that as the market moves so high, or moves up to closing in on 390, anybody who was long calls from last week into today, they're selling it because they're just taking some profits. So you have this combination of the market being up, no crash over the weekend, no, double dip, I guess, or 2-3 days in a row where we hit, we go further down. Even though bonds, they were talking about bonds all weekend, but even though bonds are not trading that great today, the market first day of the month which most of the time, I think historically, 75-80% of the time, the first day of the month is a positive day. Okay. So there was an interesting stat that said if you invest only on the first day of the month, right? You buy on the close of the last day of the month and you sell on the close, you make like, I don't want to say exactly that I know what the numbers, but you make like a high percentage of the total gains over the course of the year. So you just trade 12 times, you trade 12 days a year, you buy on the close of the last day of each month, and you sell on the close of the first day in each month, and you make most of the gains for like the last 10 years. You can look at that. Wow. It's an interesting little research project that you could do. The almanac, the stock almanac probably has some of that stock data. So I think that's pretty interesting. What you're talking about today, though, is yes, I was looking. There isn't that much today as far as UOA. But how do you? I mean, what do you use? Let me see your screen. What are you doing to sort things out?
Yep. Yeah. Let me just share it real quick. Okay, here we are.
So we're on the same page.
Okay. All right. So this is what I do. Usually I go IV up.
Yeah.
But since there's only 29 stocks, I just do all, and I sort it by IV change.
Okay.
And then I look, these ones I already look at, the ones that are up, but then I go here and then I look at, you see 0, minus 0.2. So these small ones up to minus point, maybe 2, 3. I take a look at those because those are not like too much.
Right. So just because the IV is down on a day like today doesn't necessarily mean that there's not buying. So it is true. Again, it's just the whole market's going to be down, and so it's going to drag everything down. But there is definitely a few names. I mean, I do the same. What I generally do is, just to give you an idea, is here, you can see my screen or no?
Yep.
So I generally just click very quickly, IV up, and then I start looking at the volume. for the day. And then I do the same thing. I look at the changes in implied vol on these. So I'll take the top 10 here. I'll take the top 10 here. I'll look to see the top 10 calls. I'll look to see the top 10 puts. And then I'll look to see relative value, what's trading higher than usual. There isn't that much today. Okay, so this is sort of what I look at. But today, I did look at a lot of things. I would say there isn't that much. There's a few things. But today is one of those days where you're looking for the setups and you're looking for the opportunities. You're looking to see what's trading and what maybe people are what they're looking at. So why don't we take a few that was outlined? What do you think? Which one do you want to start with?
I want to start with Excel.
Excel?
Yeah, Excel.
Excel. So this was a newer stock, so I got to get the name there. But Excel, $15 up 80 cents. Yes. Small cap name and all calls. Okay. So they're buying calls, and Excel is this a SPAC? It might be a SPAC. Yeah, Excel Fleet.
I think it was. Yeah.
EV charging stations. Okay, so it's an EV name. All the EV names, by the way, are doing pretty well today. They're having a little bit of a bounce. You got NEO after the bell. So Excel looks like they're buying the 17.5, 15, 17.5, 20s. Let's just see. Yeah. So I mean, this is 11 o'clock, right at around 11. Some spreads, it looks like. I don't know what that spreads are there. But let's look at 85.90. Okay, so the volatility coming in was about 120. And these things right off the bat started trading, opened up where it was, and then you see the implied volatility. So this is clear that there were buyers, right? The IV opened up where it was on Friday. You see the yellow line, and then all of a sudden there was a buyer, takes it higher here, and they're buying, looks like the 17.5 calls in March. Yes. Okay, so I would look to see, the next thing is to look, this spread here, I'm not sure what it is. It might just be someone that came in, that was at 11.05, but these are clearly, it looks like it's clearly all buying with the stock reference here. So, all right, so let's go back and see what are they buying. So I'm going to throw in 21.25. So let's say 22. So $22 on XL Fleet. I see here that the stock had a major move at the end of the year up to 34 and has since got cut in half. Okay, got cut in half. So let's go to a bigger chart. And let's see. Yeah, XL. It's a disaster.
Yeah.
So this was. You see, if you're over here, they must have signed something here that made it push it up while everything was going gangbusters at the end of the year. And then, so we can look at that date. That's interesting to me. And then has come down this mountain. So you see, and again, I think every one of these names will experience the same mountain or have something that looks like it. But that's a big move this year, sideways. So it's down sideways really, and then another move down sideways. Another move down. Now it's people are buying these right around here for it to get to this, we're 22.19. It's going to need obviously some bigger earnings. But I would be under the mindset that these energy names have maybe reached their high for a period of, let's call it the next 6 months or 8 months. And this is, people are looking at this and they're seeing, what are they seeing? They're seeing 35, right? And they're thinking, okay, 15, 17 up to 22, that's not a big deal. But the reality is can all of these be worth as much as they're worth, right? This was maybe we look back in 10 years and this was a historical 2 months where the EV names all jumped up. The whole EV market cap jumped up by 3-4 fold, creating billions of dollars of paper profits, and then started its decline. I see what people look at. They're going to need an announcement. They're going to need something to move it up. I don't know the name well enough, but again, they're looking at this and they're looking for a bounce here. I just would be careful on all these names. We're going to find out today, whether these bounces actually work. In once the market's evil, once it turns, it makes it very difficult, right? So you're looking at this NEO, everybody's betting on the 50 calls today. There's a lot of open interest there. So let's just see. I'm just switching from XL to, it's an EV name, right? So they're all EV names. They're all trading the same way. They're all rah, rah, go, go, go. See the 50s here for the earnings tonight, 33,000, 16. So people look like they're playing this. When I see something like this, I get nervous that it goes the other way. I get nervous that everybody's leaning long here. It's likely everybody is buying these calls. And I get nervous that when everybody's leaning one way, the referee calls offsides and the stock gets drilled down to sort of, let's call it 43, 44. So it would not surprise me if you see a 43, 44 print tomorrow. I get nervous when I see everybody coming in and looking at this. All looks like it's probably buying, in my guess, right in front of the earnings. So, you have something like NEO. Can it come back here as a spike? Yeah, I mean, no doubt. But usually this is not so healthy. Usually, this is not so healthy. This is sort of saying it's a trick, right? It could be a trick where it's trying to get you to buy it because it's down and it's NEO and the price target's at 300, 1,000, like a Tesla, and then you can get a drop to, towards this level right here, even 40, 45, 40. I would just be a little concerned here with these. I think all of these names, what's the charging name? Blink. Where's Blink today? Probably up. I'm assuming up with everything else, but not rah. Right? I mean, this thing has come down from 60 down to 32. Had a $8 move last week. Traded back up, and it's sort of $2, 1 point. The market's up 2.2%. If it was over here and the market was up 2.2%, Blink would be up 5, 6, 7, 8%. But it's not today. I'm sorry, it'd be up 10%. Today it's up 2 to 4%. It's just sort of climbing and hanging on by a thread. So I'd be a little concerned. I'd be a little bit concerned with these EV energy names trying to get back in right now. I think that the market is going to be under a little bit of pressure. It doesn't mean it's going to go down, but I don't see it going up into the next month so much. It would have to. To me, it would be a very significant move for it to go up because of the rebalancing, because of what you're seeing in bonds. I suspect that you might get something like a bonds trade over the course of the next 3 weeks. Bonds trade back towards 50, and you're going to call it the next month, right? Because you have a lot of rebalancing. We've been talking about this, where at some point 2%, in the 30-year, 2.25 is going to seem pretty damn good relative to some of these tech names that are trading at 25, 30 times sales. That becomes a little bit of a problem. So I would say, look, there's one day doesn't make a trend. The SPY clearly is up. It's killing anybody who wanted to be short here. On the side, I'm always telling you, Marco, that the market doesn't allow everyone to win on the downside, especially. It doesn't allow everybody to catch, this crash. They make it incredibly difficult. And when you see things like 392 down to 380, up to 392, down to 380, 378, look like a crack, up to 390. What that is, I call it like a toilet bowl. They're just trying to shake. They're trying to just spin you around, get you dizzy, get you out. It becomes very difficult to hold puts in this environment and to hold calls even in this environment, because you hold calls, it goes straight down. You get long puts, it goes straight back up. It's shaking of the tree. It's not allowing people. It's not going to allow people to win. So you got to be very diligent with your stops. You got to be very diligent with taking things out, putting things on, taking things off, being patient. This market is evil right here, which means the more you see that, the more it's telling me that the market's about to make a big move. Up or down, I have no idea. But it's doing this thing where it's shaking people out, and it's gonna try to make a big move.
Right.
Okay. So
Okay.
that's something to think about.
Yeah,
But yeah,
for sure.
so I mean, look, the SPY puts that we had, they hit 100%. And I mean, you know, I talked to you briefly before. Why don't you tell them what how you feel and what you're thinking and what's going
Yeah.
on with you?
Yeah, for sure. For sure. Before I do that, guys, I think I need a like beforehand, just drop a like so
Okay.
I can tell my story in
Yeah,
case,
help us out.
peace in mind. Yeah, yeah, definitely. And I don't know if you guys seen our poll, Tesla 500 or 800 target stock price. What do you think? Just comment in the chat as I'm telling this story. So what happened on Friday is I was looking into some additional puts. So I had some puts from Felix, and I was looking at more put spreads, and I think it was at a high around 393. Was it? I bought some SPY puts, and then
Yes.
that same day I think it dropped down to, or tomorrow it dropped down to 378, and I think it was 100%. I didn't get out because it was one lot, it was one put, and my logic behind buying that put and not exiting at 100% is I'm thinking I got all these calls lined up. If something happens, if some crash starts going down, I want to have some puts on, even if I go down 50-60% on them, I might keep them just because
Sure.
I want some protection. So that was kind of my
Yeah, the at the end of the day, you're experiencing what I'm always talking about, which is the difference between a small account and a large account, right? A small account has to be right at the entry point. You're buying one or two lots. You have to be right at the entry. You have to be right on the exit. You have to be right on the portfolio on how many calls versus puts. You got to make all these decisions correctly every time. It's very, very difficult. I would say almost impossible to be able to do that every time. And so what you're experiencing, and I understand your frustration. You're down, you're up 100%. That SPY put trade should, if you have three, for the difference for a large account is that they can sell 1/3 at 100%, and now they got 2/3, but they also have 5 calls. Maybe one of them got stopped out on Friday, and so they're just sort of managing the ups and the downs and trying to, when it's down, take a little bit of profit on the put side. When it goes up, take a little profits on the calls. In the middle, trying to just manage and be okay and get through this. But unfortunately, for a small account, you don't have that luxury because you cannot. You made the right decision to keep it on because you have no other puts and you have 4 or 5 calls on. Then you have to keep it on. But you see the struggle. You see the difference between someone who has a larger account who's able to just say, hey, I can just take that. I can just take off 1/3 and I'm okay. And then the market goes up 2/3 and it's now he's even thinking I might even be able to put one back on because my calls are working and things are starting to move in that direction. But it's an ebbs and flows type of game. So I would say that's the small account versus big account that will be a constant struggle, constant dilemma of when do I get in, when do I get out? So
right, and on that day I've seen all my calls, they were all red, and then my puts were going green. They were getting up. It was feeling good, so I was just like, let me keep it on. But with that in mind,
let's look at another one. Let's look at the one that we were looking at earlier. This, where was it? Beyond puts.
Yes, I think so. Beyond
Meat. So that's beyond meat, beyond puts.
May 21st, I think.
So yeah, so here's a chart that looks like a disaster. Okay, people were thinking about getting short here. Okay, you see my
Yep.
So there was put buying going on around here, to be honest, right around here. Can you see it? Okay.
Yeah.
Okay, so there's put buying going on around here. This. Okay, so clearly we're looking at this line right here, the 120 line, and put buying going on here after this drop, going on here, trying to break this line. It breaks it a little bit and then immediately shoots up and then shoots really high to 220 on the earnings with McDonald's and whatnot. This is a disaster for shorts, for people who are trying to bet lower. They take everybody out. So they take everybody out here and now they start dropping again. There's a put buyer today and it looks it's more of an in the money. It's an in the money put, but it's a decent amount. It looks like he's just using it as a short. So instead of shorting the stock, he's coming in here and looking at which one's the May 70 puts. Looks like he's coming in to buy these. Okay, May 70 puts, paying $33, $34 So that's a break even of 137, and call it 34 times 2. Usually when they're doing in the monies, you could just multiply it by 2 that far in. So 34 times 2 is 66. Let's call it he's trying to get it down to 100. So he's looking for a break of this 120 again to get down to maybe fill this gap somewhere here, this gap right here, that initial gap. So gets you to about 100. That's where the gap is. So buying probably a frustrated short, to be honest, and then someone saying, okay, I don't want to short this name because this could happen, so I'm going to buy the 170 puts, pay a little bit more, but I do think it's going to break this level and come back to 100. Does that make sense? So that's one that I think is interesting. It's hard to play beyond because you're looking for this. You got to break this 120 level. You got to break this 120 level, and the options are they're not coming cheap, and they're not. The market's basically saying, okay, well, if you break 120 in May and you think it's going to 100, this one, these 120s at $7 make it 2-to-1. It's not necessarily something that's going to excite you.
Right.
The market's the market's pushing you. The option chain saying if you only think 100, it's pointing you closer to 135s, which means you got to lay 12 and a half, which becomes very difficult. So I respect the puts and beyond meat, but this is just a short. This is somebody who is scared of getting blown up on the upside.
Okay.
And I've been seeing a little bit more of these types of trades, people using puts instead of shorting stock. I'm assuming after Wall Street bets, it's that's not something that people don't want to get caught.
Right.
And so that was beyond. Another name that's interesting that is out there that we've seen flow in is Penn Gaming. Okay, but the volatility down today. I believe this was out of the gate. I believe somebody was in June selling these. So we look at these right out of the gate. It looks like 4,000 and about 9,000 traded. Vols came down a little bit here. So we're looking at the vol 72, 71. So it traded 15, 16, 14, 54, 42. So they were trading down. Stock was actually started trading up. So you could see the vols come in a little bit, 72.3 all the way down to like in the 71s until it starts coming up again. But it looks to me like someone might be long the name and taking the opportunity to sell calls. Now, this is a name, we like this name. This is a name where it's David Portney. And again, I think a genius marketer. The stock has come a very, very long way. And we've been seeing call selling and even, I believe, put buying here for the last 2 weeks. So it's someone that is hedging themselves a little bit up at this range.
Right.
Okay, makes sense?
Yep.
Okay. So that's what I would say with Penn Gaming.
Okay.
What else? What's another one?
I've seen DQ as well.
DQ?
Yes, DQ.
Disqualified DQ?
And they're a Chinese energy company.
Oh, of course. Oh, yeah. Puts.
Yeah.
Puts. Why puts? Stock's up $13 and people coming in to buy puts?
Yeah, and it's you're looking at like 80, 78. So it's
115. Yeah. Hold on. Okay, so let's just look at DQ on the chart. It's interesting. I've never heard of the name. Daco New Energy. So they are buying these. They're buying puts right around here. And large volume, 2 days in a row, 95 to it's up $22 in the last 2 days, and traded 82. Okay, this is a wild one, I would say, but let's just take a look. I would frame it. What's the level you see? Probably right around here is one. Okay, so let's just call it 85. Seems like 85 is about there was resistance here, broke through, support. Okay, 130 is clearly going to be something. Those are the highs. Looks like 3 times to try to push right around 130. And then I would say the other one you could see pretty clearly, I think, right around here, 47 and a half.
Yep.
Right. Okay, so we have 47 and a half. Even if you brought it down to this high. Let's call it 45, right? But you're right around that area, 45,
Okay.
45, 85, 125, because this is just spikes. It's right here, right? If you wanted to sort of play there. But you see how it's just to eyeball it, 45, 85, 130 is sort of about almost the same type of 40 plus 85, 125. So we got about the same range. They're looking for, which ones are they buying? The 85,
Tell you 100 puts
95.
mostly. Yeah. And then, yeah.
Are they buying spreads? Let's look at the 100 puts. Oh, so they're buying spreads here. So let's see which ones they're buying. So they're buying, so this is 134. Okay, so the 100 puts, maybe they're buying the 115s. 115s at 12.10. Buying the 115s at 12.10. 115s at 12.10, and then selling maybe the 100s. That was at 11.40. The 105s. 105s at 8.10. So 12.10, 8.10, $4. $4 for $4 for $10 put spread. Oof. Not terribly exciting, if you ask me. I mean,
Right.
to be honest. So I'm wondering if this is, they might have been long. See the open interest there?
Yep.
Okay. The open interest there is almost 3,000. And you see this number over here, 29.16. So this is about, let's call it almost 3,000. It could be that they were just rolling up here. So it could be that they're selling these that they bought, the 105 puts, and then they're buying the 115s. I don't think that they would come in and pay $4 for a $10 put spread. Okay, so that's a clue. You see that clue there? $4 to make 6 is not something in general that people are excited to do. Okay, so none of the big guys that are rolling out of bed going, oh, I want to go lay 4 to make 6 on DQ. Not what they're doing. What they might be doing, though, is someone who's long 2,900, 3,000 of these, and 2,900, 3,000, and then say, okay, well, the stock goes up, starts moving higher in the morning on a gap. I'm actually just going to roll my 105s. I'm going to roll into 115. So this is someone maintaining that position, maintaining that put, and then maybe here, what are they doing here? $7 and $5, so 582. These are the 100 puts. So the 100 puts, what are they doing here? No, doesn't look like maybe that one. 105, 100 puts, and the 110s. So maybe something like over here where they're paying 5 for 1,000 of these. 110, 105, 95s. So you see here the open interest. It looked like it might simply also be another put spread where they're rolling these up. So it looks like someone is taking all of these and they're rolling them up. Okay. That's what it looks like. It looks like they're using the 105s, that maybe they're rolling the 95s to 105s. They're rolling, some 100s to 115s, 100s to 110s. So they're just rolling all of these up to somewhere around here.
I see. Okay.
Okay. Which is interesting because it is a decent amount of premium. You're talking about probably, if they were long here, 1,500, 2,000, and 3,000, that's 6,500 puts at an average price of, say, $6. That's $3.7 million. Now they're moving up to the 110, 115. They just added another, call it on average $5, $4 or $5. So they're in for $6 million in premium already. It's a decent amount in this name.
Yeah.
$6 million in downside puts in that expire in March in DQ. That's a decent amount. So I would say something to definitely keep an eye. I mean, it's a decent amount. If I had a handicap where it might go, I would just simply say, okay, went from 130 to 82, which would get me around $70, which is right around, interesting, it would get you right around here. Okay, so sorry. So you know, again, it's just ABC, right? I'm doing this once. It makes its move here, makes its move back up. And then if we turn lower, then, you know, then the stock does something like, sorry, it starts going down here like this. So you got this ABC, and it actually 70, it actually lands right to 70, which is an interesting level. So the way the graph is lining up, right? The way it lines up very nicely, and then you throw on that someone is getting very short with $6 million of premium being thrown at DQ at the call it 15, 10, 105 range. Yeah, I mean, I could see that someone is trying to get this down to around the 70, 85 level is my guess.
Okay, nice.
Okay, so I don't even know anything about it, to be honest, but that's just, I'd have to look at what it does. And remember, the two questions are, how does it make money, and why is it exciting right now? Why is it going to head lower now?
Okay, cool.
All right.
Just one thing, your voice broke a little bit.
So did it again?
Yeah. So maybe why didn't you try leaving and then coming back in a second, and then maybe.
Okay, let me try that. You want to try that?
Yeah, for sure. Yeah. And then, guys, in the meantime, make sure you like the video, make sure you subscribe, and help us grow. We've been growing really well, and we're hoping to reach more people with your help. It's been really great. I've seen some good UOAs here in the chat, so if you have anything else, make sure you comment and let us know what we should be looking at. I got the SLB and NTES as two interesting ones, and then I'm looking at some more that we can show Felix and hopefully find something cool. All right, here he is. Okay, Felix. Can you talk again? Yeah.
Did it work? Can you hear me?
Yeah. It's good. It's good.
Yeah. Okay, good.
Okay, now we got it fixed. Nice.
There you go. There you go.
Cool. All right.
So here, let me just do this over here, and let me do. All right. Good. All right. So
cool.
Where so where are we?
Okay, we got a few from the audience that look pretty good.
Let's check it out.
So one is NetEase, NTES.
Oh, NetEase. Yes.
Yeah.
I know NetEase. Hold on one second. Let me just see NetEase. Sorry about that. Let me just get this. Okay. NetEase. Puts or calls? What is any NTES?
NTES, yes. Calls in September.
Okay, I see it. 120 calls. Let's look at here. 46.
I would assume the volume would go. I mean, the IV would go up, but more. But
yeah, maybe. 46. Remember, on some of this stuff, the IV probably should be down today. So the fact that it's up in September, the further you go out, the less the further you go out in options, the harder it is to move the IV. Okay, the harder it is to move. So the fact that it's up, you know, let's call it 3 to 5 vols by the time, 46. So it was up about 4 vol points today. The market's probably down, you know, 3 vol points. So on a normal day, maybe this thing would have been down 3. Today it's up 3, so it's really up 6. And in September, that's a lot versus, you know, taking a look at March options. You know, 6 vol points in September would be like, let's call it 15 vol points in March.
Okay.
Cool. So 3 is nothing to sneeze at all the way out in September, especially in a day like today. So I would say that this looks like it was up. It looks like it was bought, and it looks like the stock took off. But you see that the IV is actually holding to some extent, although it probably looks like it's going up. But there's a 1 data outlier here. So stocks look like call buying here in NetEase. Okay, I kind of see I just peeking at that chart. Let's just kind of see what the chart says first. We can go options first and then chart, but let's just try to look at chart. So I would say immediately that to me looks like a level. Okay, 102.5, whatever you see here. This is resistance, break, support, and then support again here. So we have some volume come in as well, which is healthy. That's positive, right? You want to see volume pick up when it gets to this line, right? So the volume didn't pick up the first time, but here it looks like it's picking up here a little bit, right? We have volume, good volume here.
Yep.
right? And then you have this sort of decent volume over here. So someone is looking at NetEase, and they're trying to play a bounce back here. Stock's gone from 135 to 105, bouncing to 111, and where can it go? You know, here's a little bit of a gap lower, so maybe 122, and then 135. So looking at it, and he's going a little bit longer term. So then I want to do this. Let me just get rid of this. So longer term, somebody is saying 85 to 135. That's 50. And then 50 plus 102, 152. Can it get to 152? Geez, this is.
Yeah.
I mean, look, this is a name that NetEase. I know the name. I'm not sure I fully understand the whole story there, but so that's what I say. We're looking. He's got to be looking close to like 135 and then trying to break that. But let's.
They're actually a partner with Blizzard, which is ATVI. So.
Okay, that's interesting.
They're
in China. This is a Chinese name, right? NetEase.
Yes.
Yeah. And what are they? They're in.
They're leading provider of self-development PC client and mobile games. So.
Oh, okay, that's fair. I like it. All right, so I'll do some more reading in that, but let's look at. They're looking at the Septembers, we said. So the September, right? The September 120s. Look at that without even looking. 155, right?
Yep.
And what did I say? 150. Okay, so where's my charts? What did my charts say? My chart said, real quick, I could do it again real quick. My chart said 85, 135. That's 50.
50, yeah.
50 plus 105, 155.
Nice.
So there you go. That's what they're looking. So they're looking. It's a tactical setup. I mean, all these right now, I guess, are technical setups. But you have this. You have this buying here, a big run. So this is A, B, C, and looking for D somewhere up here. So give me a good tape, and you're gonna see. You're gonna hope that this is. You're betting that this is gonna go and make that type of move. Okay, that's interesting that played out like that. So again, it's just framing it and seeing if it makes sense, right? So I want something to make sense, and by the way, 155 sort of should make sense to you because you're not going to pay $10, $11 for the 120 calls if it's not going to go to at 150 they're worth 30, so you make 2 to 1. But this is already out of the money, so you need to make 2-3 times that. So that's where 155 is going to be your answer, somewhere right around 155. Okay.
Yeah. Okay. Nice.
Okay. So that's interesting because right now we have the option play that we're seeing someone come in to buy to 120 calls. We're seeing the board, the chain, without even knowing anything about it, the chain saying, okay, where do you think it's going if it's going up? The target for longer term, okay, 155. It matches exactly what the board is saying. The options board is saying, now I want to read the story. Now I want to remember the earnings transcript. I want to read news. I want to go back and, just to give you an idea, I want to go back and figure out, okay, and again, the nuances, right? Sometimes I don't really say exactly all the time what I'm looking at, but tell me what happened here. Tell me what happened here. Tell me the news there. Tell me, maybe the news, maybe this was just the market, but these are interesting levels, like these gap moves up from 97 to 115. Why did it do that? Why did it gap through here? What happened on these days? Show me the news. Tell me what was happening there. Tell me here again, it gaps again for a period of $20. What was happening there? These are things that I look at to try to sense what was causing the market to if you don't know why the stock is going up, a big clue you can get from these days are if there's news about maybe they struck a deal on something, and then they strike another deal. They have another PR that strikes another deal here, or there's news on, whatever here, and they're all lining up. You know what the market likes. You know what the market is betting on. You know that it's focused on, if they sell phones and TVs and the news that's coming out is on phones, and the market's focusing on their phone business, whatever. I'm just throwing something out there, but you're going to understand. It should become clearer with the news and why the stock is moving. And so I'm looking for that. Okay, I'm looking for that. These are big clues, and then when you add that to the transcript, to the earnings transcript, you start getting a bigger pic. You start seeing the bigger picture of what's happening with the company.
Nice. Okay.
Okay.
Yeah.
What's another one?
That's a great one. Another one, TMUS, so T-Mobile.
TMUS.
Yeah. It wasn't too exciting, but it was some. March, yes, 130s.
So immediately what I see is this right here. And I know that T-Mobile doesn't trade a lot of options. So it's likely that this one was, if this is a buy, which it looks like it's probably a buy here, you know, just by looking at it, but let's just see 122. Yeah, it looks like 27, 122.35. Yeah, premiums are going up. Stock was going up. And vol was 36.2, which was higher. So yeah, it looks like a buy. And the problem that I have with this is either this is, let's look at it one more time. Was this a spread? So 588 spread. So it looks like it could have been a spread with this. And it could simply be someone is selling out. Someone could have had the 25, 130 call spread on, and now they're selling one of these to buy three of these, or one of these selling one to buy two, something like that. Do you see that? It looks like it might be just closing down with the stock up 3. I'm going to close down some of these, and I'm going to buy back some of these.
Right.
Okay, and I'm doing it on a ratio, which means I can actually, maybe I like it. That's why I'm long these. I would have to look at the history. Did they buy these 125s? Because if they sold these and bought these, it looks like they have a little bit more of the 125s. Okay, so that right now with the stock trading up 3, they might say to themselves, all right, I want to get these back, these 130 calls. I want to get them back. I don't know where I sold them. We can figure out where they sold them, and you can say, I want to get them back. I want to sell only 2,500 of these. I want to buy almost all of them back, or 5,000, do a 1x2 and buy these back. So this here looks like it's just managing what they have already on. But it looks like that the 125s were probably, these are probably a buy. These are probably a buy, just from how the board, just eyeballing it. I'd have to look, and I don't know, but it looks like these might be a buy.
Okay.
All right.
Okay. Yeah, fair enough. Good. And last week you promised us, to show us some repair trades.
Okay. Let's think about that. Let's think about how we can do that. Look, I'm not. Here's the ground rules with repair trades. Okay, the ground rules with repair trades is that you generally don't want to add more money to the trade. Okay. Meaning, you put in, let's say you're buying 3 lots. You buy 3 lots. You buy 1. You buy 2. You buy 3, and then it goes completely against you. And then you want to do a repair trade. Okay. That's fair thinking, goes against you. Instead of getting stopped out, how do I repair this? Fair thinking. The problem is I don't want you putting any more money up on the table. It's like what happens is people say repair trade, and then I look at it and I really say, you are putting more money to work. It's like doubling down in a way, right? It's if we've lost already 50%, that means the market is telling us this idea is not really working. Okay. Now I get you want to repair, but you can't. You don't want to be throwing more money at it. So the only repair trade really that I see that I think is worthy for what we're doing is what's called a 1x2. Okay, they call it a 1x2 put spread or 1x2 call spread. And what essentially that does is it allows you to, with calls, let's use calls as the example. It allows you to raise your strikes. Okay. I'm sorry, lower your strikes because you're wrong. So you bought calls and the stock went down.
Okay.
So you're losing money. Okay. You're down to 50%. Okay. And you got to stop yourself out, or you got to do something here. 1x2 call spreads allow you to reduce the strike. You would rather have, instead of the 100 calls, stock goes to 90, you'd rather have the 95 calls. Okay. So the 1x2 says, okay, you're going to sell your 100s. Okay. You're going to sell your 100s and you're going to buy the 95s. But you're not going to buy the same amount. So if you had 3, let's call it 6. You have 6 lots, 2 you bought. You have 6 of the 100s. What you're going to do is you're going to sell the 100s and you're going to buy, let's call it the 95s for right now. You're only going to do that if you could sell the 6 at, let's say they're $1. So you pay 2, you sell the 6 at $1 to close. And then you buy the 3 of the 95s for, let's say they're $2. Okay. You buy that strike where it's double the price. So you're going to buy the strike where it's double the price, but you're only going to buy half the amount. Okay. So it's called a 1x2. So you just, if you had 6 and you did that, now you only have 3. Here's the issue. The issue is that you're still at 50% losses. Doesn't matter whether you disguise it as 1x2 or you do this or that, you're still at 50% losses. And I don't want you taking 50% losses. Okay. I don't want more than 50% losses. It's very difficult to win over time by continuously doing that, writing something to 0, or you do the 1x2 and then you lose, money there, or it keeps going down and then you're really out the full 100. So 1x2s, the way I teach it to people is, you get rewarded for being patient. Okay. That's how I try to get people to be patient. You get rewarded for being patient. So if you were going to buy 6 and you bought 2, you're wrong. You bought 4 now. And I tell you what, don't buy anymore. Okay. You're getting beat up. Don't buy anymore. So it's 2, and it's dropping. Now you only have 4 out of 6. And the stock gets down to 90. Same position as you were before, but before you bought all 6. And now you're thinking, I'm getting stopped. Well, here you're thinking, okay, I actually only bought 4. Now what I can do is I actually can do the 1x2, or I can actually do a call spread. I could actually buy the 95s for $2, okay, and sell 4 of my hundreds at $1. Okay, so net, you are adding an extra position. You're adding that last leg, but you're adding that last leg lower, and you've just reduced all your strikes. Now, your full position is not 3 or 6, 2. Your full position is going to be 4, but you're at a much lower, you're a better position as far as strikes go. You're at the 95 strike now, as opposed to the 100. Okay, does that make sense?
Yeah, and now your target is lower, right?
And now your target's probably going to be lower because you were wrong with the initial target. But what you're really trying to do in that repair trade, what I always say is try not to go for the full 300-400% that you were going before. We were wrong, right? I think when you're wrong like that and you can come back through, I don't like, and this is just me, I don't like being wrong, doing a repair trade, getting into a position where I can make my money back, right? When I get back to flat, I might actually take half of that 4 now off, because I don't want it to go back to 100 and then back to 90 and then having lost again and saying, once I've lost on a trade, I'm more careful not to think I'm going to ride this to 400%. For once options go, remember what we said, the life of an option is very interesting to monitor, right? When you buy an option for $2 and it goes down to $1 and it hangs around $1 for a day, 2 days, 3 days, the market resets. It's almost like the whole picture resets. For that option, you thought that option at $100 was going to go to 110 or something like that, right? You were going to make 400%, 108, 110. For it to now go to 108, 110, that stock's got to go from 90 to 108 in the same time that we only thought it was going to go from, let's call it 97 to 108. So everything resets, and especially if volume comes in, that's the worst. So you gotta keep in mind that if you're going from a higher strike to a lower strike, and there's other people getting involved at 95, guess what? When it goes to 100, 102, 103, those 95 people that are with you now, they're going to be selling at 102, 103. They don't care that you're waiting for 107 and 108. There's a history for you, but for them, they're just buying 95. They're paying, whatever, $2 right now. And if $2 goes to 5, which means the stock is going to go to about 101, or let's call it 100, then 98, 100, then you will be experiencing, you want to stay in, but everybody else who got in with you at 95 is excited because they're making 150, 175% at that point. So that's the problem. The problem is once you once you're wrong and you start playing this game of going lower with strike, if you jump in and then other people new jump in with you and they're brand new, they don't have the same history you have. And so they're at when you're at 100% winner, they're actually at from 95 and you jump back to 100%, they're actually getting out too, which is also putting pressure.
Right.
Okay. So that's what I would say. That's what I would say to watch and be careful. But repair trades, these 1x2s, they work best when you were patient and you can actually come back down with a better strike, right? So that's why I always say patience pays. It allows you to be a little bit flexible, and especially in this market where it's moving this fast, it allows you to be flexible and allows you to do this 1x2 type of trade. Now, if you do, let's do that. Let's go to the 100 strike again, 100 to 95, right? And you bought it at 2. It's now trading $1. So you say, you know what? I'm going to go from the 100 to the 95, 1x2. So you take 6. You reduce 6 to 0, and then you buy 3 of the 95s, right? That is now, it costs $0. It costs $0 to do that, okay? What's your break even? What's your benefit? Where do you benefit on this new trade versus if you just cap the 100s? Where do you benefit? The easiest way to do it is to just take the difference between 95 and 100, which is what, $5, okay, and add it to 100. So it's 105. So you have the 95, you have on one hand, you have the 95, three of the 95 puts, okay? You're going to perform better than the 6 of the 100, I'm sorry, calls. We're talking calls. 3 of the 95 calls. You're going to perform better on the 3 of the 95 calls than the 6 of the 100 calls, all the way up to 105. Okay. Above 105, it would have been better to just keep holding the 6 of the 100 calls. So you give up something. You're giving up this 105 and above, where you would have been better of not doing anything, or from 95 to 105, you're going to be better off doing the 1x2.
Kind of like spread.
That's the easiest way. That's the easiest way to think about the 1x2. 1x2 for even, where it doesn't cost you any money. You could sell 10 and buy 5. You just take the difference in strikes and you add it to the higher strike, and you have three strikes. In this case, 95, 100, 105. Okay, so the 95 calls, I would do better from 95 to 105. If it goes through 105 through to 110, 120, then I would have been better with the 106s. Starting at 105, I would have been better with the 6 lot of the 100s above 105. So that's what it's always in options. You can move things around. There's always a give and a take. There's no free lunch. There's a give and a take. So on all of these trades, as you get more and more comfortable with moving things around, there is no one strategy that always wins. What call spreads always wins, or this particular one. It's when you got to think about what you're getting and what you're giving up. Okay, so that's the repair trade that is most common. That is the one that people in this game, and what we're doing it's gonna matter to most people. I would say that most of the time, the best thing you can do is just be patient. Stick to the strike and just be patient. And if it goes way lower and you were patient, you get rewarded by saying, now I can move my strike down and add my last leg, through this 1x2. I would rather see you, instead of adding the third leg at the top, I would rather think about it. If you were patient to move down the strikes and keep the same strike, you would do, in that sense, because you were patient, you would be able to do a call spread. Now you're in at a much lower level. Okay. So this is how you would think about it. But for people who don't want to do that because it's too much work of thinking up and down, that's why I tell you, the best thing you do is just be patient. Hang in there, be patient, and when it's beating you up, be patient. Anytime the premium is going against, just be patient. That's gonna help you out in the long term. Trading up and down all around this and that. There's a reason I have not really focused on that, because you can start messing yourself around to death. You're just like moving here, moving things down. But for some people who are watching this every day, yes, there are opportunities. Again, patience pays. Patience pays. You're patient. It goes against you. You now have chips to move. Let's look at one. I mean, let's just look at one. You know, I know that some people are still in FCX, and I know some people are out of FCX. But we had FCX that traded. This would be an example to look at. So FCX, we bought the puts basically at the low of this last move. I was very good at that. See how good I was there? Okay. We're buying puts here for the 29 puts, okay? We're looking for 29. And I happen to buy these things. X marks the spot right here. Shoot straight up, okay, to 39, okay? You could average, so if say you bought two, and, you know, if you bought the last three, then you got to get stopped. You got stopped here. And that's it. It's game over on this one, okay? But for those who bought two, and then, you know, what do I say? Walk away. Don't buy the last two. I don't care. I don't want you to look at it. Don't buy that last two. And now it has turned a little bit here. You see how this looks a little bit like a turn. Not saying it's not going to go back up, but your 29s are now, you know, you're going to look at them again. And here we can just see, so, you know, by the way, you know, if this does turn, it could easily trade. You know, you could do this sort of move up, down, back towards at least 29 here right before earnings. So earnings are in April. That's why we bought them. So let's look at FCX. So FCX, April's, where are we? April 29th. So we'll say you're long these. You're long 4 of these. And you stopped looking about a week ago. And all of a sudden you're like, oh, you know what? The thing's turning a little bit now. And, you know, you stuck it all the way. You stuck the horse all the way in the last stable. You're like, you know what? You're starting to be a little, you know, I'm starting to like you again. Come over here. Let me see what you got. You know, and you bring this put back and you say, okay, it's 85 cents, 85 cents. I could sell my 4. For 80 cents, which is, let's call it $320. And I can buy the 32s for, let's just say, imagine this, or let's call 170, $340. So you see, it's almost, say, 8, let's call it 80. I'll do mid-market, 82, so 164. I multiply this by 2. 82 times 2 is 164. And then I'm going to pay 167, 169. So now, because I was patient, I could actually do a 1 by 2. Okay, so I can actually say, I'm going to take my 4 off. I'm only going to put 2 on right here, 2 on. And maybe now that it's turned here a little bit, I'm going to add that last third that I held in my pocket. So now I might be able to, if I want, or maybe I buy one of those 2 right here. So now instead of I got rid of 4, I buy 2, and then I add 1 more. So now I have 3 up here. 3 of the 32s as opposed to 4 of the 29s. That would be what I would consider a decent repair trade right now, because if this thing looks like it has turned a little bit. So you're going to give yourself one last chance now to say, if it does turn, and then I could leave it because it's going to trade 32, 31, market turns lower, I'm going to be able to leave it, and now I can actually win on this one. Whereas before I was getting stopped out. If you had 3, there's nothing you can do because, well, let me rephrase that. You could do the 1 by 2, but you would have had to stay through your stop here. And even if you did your 1 by 2, you would have been stopped again. You see on that 29, if you did, I'm going to show you something again. Okay. In the FCX, just to show you that patience pays, if you bought the puts here and you bought 1, you bought 2, and you bought 3 here, and then as it goes up here, 37, you do this 1 by 2 right here. So now you raise it from 29 up to like 33 or something like that. 1 by 2. Well, on the next day, when it goes from 37 to 30, you're probably stopped because it was you were on your last leg. You were at like 50% loss. So it doesn't matter whether or not you it doesn't matter whether or not you were going to make it here. You got stopped out because once you're at 50% loss, you can't really be losing more than that. And that's why I say I don't want you thinking that just because you moved the strikes from 29 to 32, 33 when the stock was 37, okay, that doesn't mean you get to take 50% loss on that. You know, you've already taken a 50% loss. Another 50% loss would get you down to 75% loss. You don't want to do that, right? That's just chasing. and you don't know when it's going to come back. So it's very, very important to just, again, patience pays in this game. And if you are patient, and that's how I get people to be patient. I tell people, because I just tell people, don't do this 1 by 2. Just get out of the position if you've already, took all 3. Okay. Mm-hmm. If you haven't taken all 3 entries, then you can be rewarded. Let's talk about changing it, because you still haven't put in your whole investment for that one position. That's right. Important. It's very, very important. These things, they trick you to think that, oh, I'm doing the right thing. I'm doing this repair, but in fact, you're actually starting it's like starting a new position. So you're starting a new position and you're already at 50% loss. It's not something that you want to be doing.
Okay.
Okay.
Yeah.
Cool.
Awesome. Thank you. And before we wrap it up, here's a question from Priya. Just pull it up real quick. All right, here it is.
What's the best way to gain expertise in chart reading? I'm giving you the best lessons you can right here every day. I think that this is just me. Now that you've been listening to me for a while, I'm a simple guy. I like simple lines. I like anything too complicated. I worry that it's just too complicated. And I think I've done this for a very long time. I've seen a lot. You're either going to be the extreme and you're going to go for your CMT and you're going to learn everything, or you try to keep it simple. And simple is pretty powerful. I would find 1 or 2 things that you like, 1 or 2, you start at, here's what happens. I talk to many people that study so much. And what happens is they learn the MACDs, they learn the RSIs, they learn the breakouts, they learn the volume, they learn all these different things. And then what happens is they only want to trade when every signal is pointing in the right direction. Man, that's hard to do. That is hard to do. And what happens is you start second guessing everything that you're doing. I want to get long this. This looks great, but this is telling me something different. Or this is saying, go short. The signals are good. I would say you can do really well finding 2 that you like, to outside of candlesticks, outside of MACD, RSI, outside of breakouts, outside of volume. Okay, you can find 2 other things that you like, and I think you'll do very well. You'll find the right thing. I think, and I've spoken to Priya, and Priya's a smart woman. She does something with volatility and cones and looking for these things. I think that's one of the best setups. Okay, the best setups, these like bull flags or bear flags where there's this cone developing, right? Where the volatility, and there are some systems out there that sort of pick up on when volatility might pick up, because that's what you're looking for. You're looking for these cones to break out down or up and play the options that way. So there's a lot of different services out there. I would say that you can, before getting any service, at least in charts, you can get a lot just from understanding those 7, 8 things. And, it's on my list to do, where I will outline, the technical stuff for 3 Steps to Profit members. But I do it here all day. I framing, this framing of the chart with simple lines is powerful. It's powerful. I learned that from a smart technician who told me from the beginning, try to keep it simple for yourself, and then you can overlay many things. But when you frame it, and it took me a long time to sort of, get really comfortable framing things. But when you can frame something, you start seeing the stock differently. You start seeing where the risk reward is. And, that's my gift to this podcast, because I don't really just give that to anyone. I thought, what, let me just show people what I do and how I'm catching some of these targets and how I'm catching some of these moves, because they've worked. I've seen it over, 1 million charts. I've looked at 1 million charts over 25 years. Certain things I see work. So my best advice would be to, these Elliott waves, I think they're really interesting. You can get most of it online. Okay, most of what you need to know you can get online. I would say breakouts, obviously support and resistance, but I would get comfortable with what I'm doing, where you're framing the stock. You're coming up with a picture and you're drawing horizontal lines, and then maybe if you see a trend line here or there, like a diagonal that goes directly, that's fine too. But I think if you start doing that and keep it down to, when I'm framing something, 5 lines, and remember, it's just going to be sort of, you're creating boxes. And when you do that, you're going to start seeing things very differently. And that by itself, separately, add that component to the options, and all of a sudden the options telling you a target stock price here. We just did it. The options telling you a target stock price here, and it just so happens that the technical analysis, without even knowing anything about NetEase, gets us right to where the ABC pattern is. I mean, you can't make it up. So it's, this is how the world, in my world, works. And I've seen it's not always right. It's not always right. But when it's wrong, it's telling you another story too. When it's not moving that way, it's sort of saying it's not working. This is actually weaker than what I would expect it to be. And so once you have things that you like, you're seeing the world the way you see it, and it's giving you clues. And the only way you can become very good at anything is with repetition. And we've seen it. Like I said, I've seen a million charts, so I'm very comfortable when I frame something that I know, okay, this is my risk reward, right? I know these are the boxes I'm looking at. And then on top of that, you see what I did? I framed it, and then I used ABCDs around it, and boom, there. That to me works nicely. It also has time in there. ABCD, the Elliott Waves has some time in there, and so I can then do this volatility cones. I can then look at volatility and see how it's squeezing. They have what the people call the squeeze. There's some merit to that. So, but everybody's different, and without, I can start putting 20 things that I look at on the thing, but I try to keep it simple with simple lines. When you see that, and then you say, I can do that, and of course you can, just takes time, that's when it becomes very powerful. So we have the options, we then have the charts, and then I'm also trying to give you these nuggets on how to build that story. So, by itself, let me ask you this. How many hedge funds do you think are just based on technical analysis? Probably not many, right? Yeah, probably not many. Yeah. However, I would say that some of these AIs, the quants, essentially there's some technical analysis in there, because what they're doing is essentially looking at charts and looking at levels, and they're buying against levels, selling against levels. So, for many years, technical analysis was just a piece of the puzzle. But now, maybe there's a little bit more of that. There's the technical analysis is built into the computers. That's why these stocks tend to move exactly like the technical analysis, because all the computers are saying, buy it here, sell it here, buy it here, and then, they're just following what the pattern says. Right. So you see things that you can't believe, where to the penny, to the penny, to the penny, to the penny. You're like, how does this is insane. It's because the computers are all programmed to sell it to that penny, and then to buy it here, to sell it there. That's how it works. So Priya, I would say keep it simple, especially if you're just starting. There are a lot of courses out there. I think, and I never took a course. I sat next to a couple of people that showed me a few things, but the reality is I have 3 or 4 books here, and I literally went to Barnes and Nobles. I saw a couple of things that I liked, that I thought was interesting, and I said, you know what, I'm going to read this. I told you one book, which was Manias, Panics, and Crashes, which is not a technical analysis book. It's a history on crashes. But when you read that book, and then you go back to the history, you go back to the crashes, and you start doing your lines, take yourself back to that moment and do the lines. That's research. That's homework. And that's what I would do. That's what I was doing for many years. I was going back and saying, I'm finding my own lines. I'm finding things that I like, and saying, you know what? I'm a good pattern reader. I'm very good at reading patterns. And so I look at things and I say, this is how I look. Some CMT might say, you're nuts. I've never seen anything like that. And I'd say, you know what? It works for me, and it gives me a good levels to sort of, go against. So the Fibonacci is another one that I would throw in there. These are very good things to know at the basic level. Okay.
Great.
Awesome. Thank you.
Thank you, Felix. All right, and thank you, Priya, for the question. That was great. Thanks everybody for joining. Make sure you like, subscribe, and share us on
Thank you,
social
everyone.
media. All right.
Thank
Thanks,
you, guys.
Felix.
All right. Be
See you
good.
tomorrow. Bye.